We are here today to explain some of the differences between term life insurance and whole life insurance policies. We want to educate people on the differences between both insurance contracts. I'm here with my partner, Gabriel, who explains some of those differences today. Hello, Gabriel. How are you?
Good, Lorraine. How are you?
Good, thank you. Gabriel, can you start off by explaining what term life insurance is?
Yes, term life insurance is a life insurance policy that protects you for a specific time frame. Usually the premiums are leveled, meaning that you pay the same price for the policy year one as you would on year 30th. One of the main advantages of a term policy is that it's the lowest cost life insurance policy in the market. The second main advantage is being able to do a conversion from a term insurance into a permanent insurance policy without having to go through medical underwriting down the road if something has happened with your health. That is why it is very important to make sure you do your term policy with a very competitive company that has that permanent policy that you would want to transfer into in later years.
Now, whole life insurance is very different from term. Can you please explain some of those differences for us, please?
Yes, whole life policies are permanent life insurance policies, meaning they stay with you throughout your lifetime. They also have level premiums, so you pay the premiums either until the age of 100, or you can choose to pay the premiums for 10, 20, or 30 years. It could be structured whatever the person needs. It also accumulates cash value, meaning the premiums that I pay into the policy, especially after the third year, accumulate inside of the policy, and it pays dividends that are not guaranteed. So most competitive companies have non-guaranteed dividends, but those dividends are pretty competitive and allow you to enhance the accumulation of your cash value throughout the years. And to be very clear on the cash value, it could be used for any needs that you may have at any point in time once you have it available. You can take it out as a loan or as a withdrawal, just keeping in mind whatever you do take out as a loan or a withdrawal will be deducted from the death benefit in case you do pass away once you take that loan or withdrawal out.
Now, we've been hearing a lot about a concept called taming the bear market. Can you please explain that concept and how it works?
Taming the bear market is a marketing concept that has been marketed lately by insurance companies. All it is understanding that the cash value that you have inside of a whole life policy, because it's not market correlated, meaning that it has no correlation to the stock market ups and downs, you're able to use that cash value when there's a bear market, when there's a downturn in the stock market. Instead of going into your equities and your retirement phase to create income, you would avoid that and you could use the cash value that you have inside of your whole lives. That way you minimize the impact of the market downturn. That's why it's called taming the bear market.
Now, with a lot of people looking towards estate planning, would you say, in your opinion, a whole life policy, would that be a good vehicle for estate planning purposes?
It pretty much goes depending on your needs and wants. Now, it's one of the best vehicles to use to transfer assets to your heirs once you start thinking about your estate planning. And also, if you think you're going to be going over the threshold for the estate taxes, you can also create an ILID, which is an irrevocable life insurance trust that will help you minimize the impact taxes would have once you pass to your beneficiaries, which is your kids, especially with the new laws that have just been passed in 2019, which forces your tax deferred savings, like your 401ks or IRAs, to be used within 10 years of the second parent passing once the kids start getting that money.
Well, thank you, Gabriel. I think you explained very well the difference between term insurance and whole life insurance today.
I hope so. There's really no comparison. Two different vehicles. A lot of people try to compare them, and we don't believe there's a good comparison between them. There's a need for term insurance. Most of the time is when you have a young family, you want to protect your income. Permanent insurance has different uses, but it's still life insurance that transfers assets to your beneficiaries at any point in time, in one of the most tax efficient ways.
Well, thank you, Gabriel. And if you'd like further information, please visit our website at www.financialconceptsguide.com. Thank you.